Tuesday morning on the floor of the New York Stock Exchange, we are following a lot of economic data this week. We're going to talk about all the numbers with our guest, Mark Otto, designated market maker for Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, I was saying a lot of economic number this week. We saw a few today that are really helping the indexes, but the big ones are coming on Friday. So tell me about this week.
Well, you're right. Most economic data this week is going to be overshadowed by what's coming up at the end of the week. So we're going to have non-farm payrolls. They're going to come up on Friday. Prior to that, we're going to have initial jobless claims on Thursday. Also the unemployment rate and the ECB interest rate. So that shouldn't be a big shocker, though, because that's expected to be unchanged.
So it's a big opening of the month of April, a big opening for the second quarter. After a stellar first quarter, we can easily say that. We have reached finally the record for the S&P 500. So what now?
Yeah, that's the question, right? We're in uncharted territory. We are grinding up right now against a technical level of 1570. We've crested above it, but we've actually reverted back to it. So the next level above this is 1575, going down. Support's going to be at 1564 and 1553, but all eyes are going to be on that going forward for sure.
Yeah, absolutely. And now let's go back to other numbers that we are following pretty closely. It seems that the car sector is giving us good surprises. We saw the sales for Chrysler, sales for GM, best March in 5 years for General Motors. What this can really tell us?
Well, I think what you could see is that the U.S. consumer, obviously consumption here is 2/3 of our economy. So it's another, bullet for the good that's going on in the market. Obviously, housing data has been sort of something that people have become numb to. They sort of anticipate the fact that, housing is coming back. So to see consumer non-cyclicals are leading the rally today, they're up 2%. By far, they're leading any other sector. So it's definitely a bullish indicator.
It's totally a good sign. This week we were talking about the numbers, Friday's numbers. What are your expectations for those numbers, and what do you think the market needs to justify, continuation for this rally?
Well, non-farm payrolls, we're looking for at 199,000. That's a decline from 237,000. So, I think it's going to take a lot to really disappoint this market and have it really, significantly pull back. It seems like momentum is truly to the upside. The same thing with the initial jobless claims that are coming out on Thursday. We're looking for 352,000. That's down from 357,000. Although the range is wide again, it's 330,000 to 370. I don't anticipate disappointment. If there is, obviously it is on a Friday. We're going into the weekend, so that's something to take into consideration. More so, it seems as though the market is reacting to what's going on in Cyprus, the threats that are coming out of North Korea. So these headline countries that are making a lot of noise are something to consider, and a lot of traders are starting to watch that.
Thank you very much, Mark. It's going to be a busy week, at least a busy Friday. Thank you for being with us.
Thank you.
And thank you so much for watching.